Hello, I'm Paul Richards and I have with me my colleagues Donna Drewitt and Paul Squirrell. As we approach the end of the tax year, we'd like to take a look at financial planning considerations for investment accounts and ISAs and the support we have available to help you. So Paul, if I can ask you first, in terms of investment accounts, what are the main considerations that advisors need to be thinking about?
Yeah, well, I suppose the thing, Paul, with investment accounts is depending on the investments held, there could be three different types of returns being generated. There could be capital gains, there could be interest, there could be dividends, and each of those three have their own tax rates. Each of those three have their own allowances, so that there's quite a lot to actually unpick as you're coming up to the end of the tax year.
Okay, well let's start with capital gains. Tell me a bit more about that.
The thing about capital gains is that something actually has to be sold in order to use the allowance, and the allowance for the gain this year, and it will be for next year, is 12,300. So I'm wanting to use that allowance, something will need to be realised. The first things I'd need to consider is any gains that are already made in the current year, offset any losses this year, and maybe whether I want to use any losses that I'm carrying forward from previous years.
Okay, so in terms of those losses, how far back can you go?
Theoretically, it's indefinite, as long as you like, but there is one proviso to that, and that is that you will have had to have reported the loss to the revenue within 4 tax years of it occurring. So, yeah, I suppose that's a point to consider for this year, that you'd need to consider any losses for the 2017-18 year. If they haven't been reported already, then they will need to be reported by the end of this tax year in order to use them going forwards.
Okay, Donna, if I can turn to you now, please. How do advisors go about getting information in terms of gains that have been realised or unrealised?
Sure. So within the client summary screens, you can see high-level figures for unrealised gains for the client. But if you want more detailed information at fund level, you can download some reports. So you can run an individual unrealised gains report for the client, and it will show it by fund. Or indeed you can run a realised gains report for one of the previous 3 tax years, and again that's by fund as well.
Okay, and I know there are certain circumstances in which the gain information is not available, and I know that's frustrating for advisors. What do we do about that, and how can we help?
Yeah, I'm pleased you asked that. So we do have now the ability to input the acquisition cost online into our systems, and that's for re-registered assets, or indeed if an account has been stock transferred from another account on our platform. So we would always advise and encourage advisors that when they're re-registering assets, to make sure that they capture the acquisition cost prior to assets leaving the seeding platform before they come onto ours. And then once the assets have hit our platform, they can then input the figures into our platform and the capital gains reports will start to run for them.
Okay, so the report is for individual clients. How does an advisor take a look at their whole client bank?
Yeah, so we have bulk level reporting as well. So under the servicing menu, you can run a bulk report for your client bank. You can run a bulk capital gains, unrealised gains report. You can also run a realised gains report for one of the previous 3 tax years.
Okay, if we come back to you now, Paul, we've talked about gains, but you also mentioned dividend interest. What's going on there?
Yeah, because with investment accounts, whether or not it's being distributed, if there's any interest or any dividends going on within the investments, then they will be subject to tax. But as mentioned before, you do have allowances. So dividend allowance for the current year and next year is £2,000. You've got savings allowances that can be used to offset interest. For some people, the personal starting rate, the £5,000. For others, it would be the savings allowance, the £1,000 for basic rate taxpayers or £500 for higher rate taxpayers. And I suppose the trick is to look at what income these streams are being distributed from your portfolio, have a look at the allowances available and whether the allowances cover it, or if not, whether there's going to be tax. And of course, for next year, dividends tax rates are going up marginally, so you might want to have a look at that before the end of the tax year.
Thanks. Now, in terms of taking that look, Donna, if I may ask you, how does an advisor go about getting hold of the information about these distributions?
Yeah, so if an advisor wants to look at how much income has been paid to a client from their unwrapped or investment accounts, and how much of that is income, interest or dividends, with the aim of utilising their personal savings allowance or their dividend allowances, they can request the income distributions income distributions report, which is available via the reporting services section. So if this isn't already running, you can request it online, or you can call up through our client servicing teams to request it. And you can run it for a specific period, so you can run it for current tax year to date, for example. Now the report will show a whole host of information. It will show the distribution type, so whether it's income or accumulation, whether that payment was an interest payment or a dividend payment, and whether it's been paid out or reinvested. So it really gives the advisor a lot of information. Alternatively, post-tax year end, we do send out the annual tax voucher to clients, which helps them to complete their tax return. And a copy of this will go to the advisor within the online document vault. And this essentially will show all the income generated from their investments.
Oh, great, so loads of information
Absolutely.
available there. Now, Paul, if I can turn to you again, and I'd like you to talk to me about a wrapper to which capital gains tax doesn't apply, and that's ISAs.
Yes, mustn't forget the humble ISA, of course, and the allowances these days can be quite substantial, because the full ISA allowance is 20,000 per individual. So for a couple, that's 40,000, and if you include next year's allowances as well, that could be £80,000, sheltered. On top of that, we've got the junior ISA allowances, which are 9,000 for this year and next year. And for those juniors that reach the age where they can take out a full ISA, they can actually do both allowances in the same year. So there's lots of money that can be put in an ISAs before the end of the tax year and the beginning of the new year.
Okay, and Donna, I mean, a lot of clients leave it a bit late, don't they, in terms of their ISA contributions. How do we go about working out which clients have used their ISA allowance and which ones haven't?
Sure. So within the client summary screens, there's a headline figure which will show any remaining ISA allowance. And you can then, if you click through to view details, you'll be able to see whether that client has a regular savings plan in place, perhaps for further contributions to come in. So it will show the frequency of that regular savings plan, the amount that's being paid, and the next payment date, and the bank account in which it's going to actually.
And can I get all of that information across my whole client bank?
Absolutely, yeah, absolutely. So we have another report. We have the ISA contribution report, which is again available under the reporting services section of the website. And this will list all your clients and whether they've got or what unused ISA allowance they have available, or JISA allowances actually. It will also show whether they've got a regular savings plan in place, so the amount that's being paid and the frequency, and it also shows whether they have an investment account and the balances within that investment account should they wish to transfer those assets into the ISA using the Bed and ISA functionality.
Okay, we get a lot of questions from advisors about that. Explain to me how you actually do that.
So generally speaking, the Bed and ISA feature is an online transaction which can be done in one go. And in terms of sort of how we sort of sell for the ISA, for the investment account, we sell day one and we would buy back at the next available dealing point into the ISA. So we don't wait for the deals to settle before buying back into the ISA, which means that the client is out of the market for a minimal period of time.
So sometimes advisors and clients want to move specific assets. Is that possible?
Absolutely, absolutely. So we wanted to make sure that we were flexible when providing the Bed and ISA functionality to our advisors in order to allow them to fulfil their recommendations. So there are a number of options as to how you can sell from your investment account. You can sell specific funds for specific amounts, should you be wanting to realise gains because of the capital gains tax, as we talked about earlier. Or you can sell in percentages, or indeed you can also sell proportionally across an account, which could be ideal if you're running model portfolios.
Okay, that's great. So clearly we're in pretty volatile times, as we often seem to be. If a client wants to use up their tax allowance but doesn't want to invest in the market straight away, what options do we have for them?
Yeah, absolutely. So completely understand that clients may want to use their ISA allowances but may be hesitant because of the markets. A client can invest into their ISA and they could use the product cash facility where they could invest into that. It's within the ISA wrapper, so they are still utilising that ISA allowance. And then the advisor can move the money into the investment strategy as and when they feel appropriate to do so. An alternative is to phase the money in. So you could invest the money into the ISA, and using the phasing facility, you could phase the money into the investment strategy over a period of months.
Okay, great. So finally, Donna, for you, what support we're making available for advisors who want to maximise the opportunities in the run-up to the tax year end?
Yeah, so we've always been big on providing ISA support or tax year end support, if you like, and we have a whole host of information available. We have how-to guides on the ISA contribution report. We have it on the Bed and ISA journey as well. We have client ISA guides available as well, and this is all available on the page where this video is hosted.
Okay, thanks Donna, and thanks Paul. As you've heard, we offer a lot of online support for your tax year end financial planning, but please do get in touch with us if you'd like to discuss further. Thanks for watching and happy tax year end planning.